Hi there, welcome to kneppyinvests. In this video, I'll be doing a quick take Appendix 4C video on Selfwealth. So this company is an online broking company that you can use to trade shares in. Now, a few years ago, I did transfer from using ComSec to Selfwealth. I have not regretted that decision in moving to Selfwealth. I have thought about buying into Selfwealth on occasion in the past, but at this point in time, I'm not a shareholder. And the main reason I did move from using ComSec to Selfwealth was because of the lower fees. So with ComSec, you have to pay upwards of $20. In fact, it's even more than that because if you buy a large parcel, it's upwards of something like $30 and it's not a flat fee at that point in time. But Selfwealth is only $9.50 and we've already started to see other competitors come into the market charging lower fees than that, including Superhero, which charges $5, and buying and selling ETFs in Superhero is actually free. But this video is not about Superhero, it's about Selfwealth. You can buy Selfwealth on the ASX. So I'll take a look at their most recent Appendix 4C, take a good close look at their quarterly cash flow to see whether they're positive or negative in regards to that, and then take a look at the receipts history through the last 4 years before finishing with looking at the 1 year daily chart. And then right then I'll just discuss why I am becoming more and more interested in a Selfwealth. So the share price is dropping, and as it drops a little bit further and further each day, I do become more and more interested. So first, let's go into a little bit of a background in regards to this company. Selfwealth were formed in about 2012 in Melbourne, if I remember correctly, and IPO'd on the ASX in early 2017. The first Appendix 4C was released in April of that year, and we'll take a look at those numbers when they released that report. Now, market cap $119 million, so I'd say that's neither low nor high. If it was like $20 million, I'd be very excited about buying into Selfwealth, particularly when you see the share price is falling each successive day, it seems like. Anyway, revenue is growing at a very good clip. $13.7 million in the trailing 12 months, and they are operational cash flow positive. This is something I really look for in companies this size. $1.2 million in cash flow in their operations. So that's a massive tick when it comes to my checklist when I look at companies like this. So the main reason I do look at Appendix 4Cs is to see a company being operational cash flow positive or not, and Selfwealth gets a tick. The first stop in the Selfwealth Appendix 4C journey, for me anyway, is looking at their cash flow from operating activities in the statement of cash flow. So typically when a company releases their Appendix 4C, there's about 5 to 7 pages of activities they've done during the past quarter. I typically skip all that and focus or go straight to the numbers. That's what I'm interested in, looking at the numbers. Now, receipts from customers is the first thing I look at, and for Selfwealth, that was 5.8 million. In isolation, that means nothing to me. I want to see a trend, and I'll show you that trend in the next slide. The next number I look at, in the most important number in my opinion, is to see whether the company is operational cash flow positive or negative for the quarter, and Selfwealth for quarter 3 was positive to the amount of 558,000. Now, companies can be operational cash flow positive, but there's also cash flows from investing and financing activities. And sometimes, even though they can be operational cash flow positive, they still lose cash because of those two other types of cash flows. Now, for Selfwealth, they did grow cash through the quarter from 7.3 million to 7.4 million. So this company is growing cash through their business. So they made no loans, made no capital raising. So they are growing cash right now. So again, that's another big tick in my checklist for this company. The next stop in my Appendix 4C journey for Selfwealth is to look at their receipts history through their life on the ASX. So we can go back to April 2017 when they first listed their first Appendix 4C, $40,000 in cash flow in operations. So they have improved that each and every quarter. Well, maybe not every quarter, but they have improved that since then from $40,000 to 5.8 million. So that's a significant growth in cash receipts. So what I'm looking for here is a trend up, and there's most definitely a trend up when it comes to cash receipts for Selfwealth. And ideally, I want to see some exponential growth in cash receipts, and we almost have that with Selfwealth. And when I calculate the compound quarterly growth rates, the number I get is 37% per quarter. So that sort of number per year will be great for a shareholder, but this is per quarter. So again, another tick when it comes to Selfwealth is looking at the cash receipts history. We get a really good uptrend, and in fact, it's an increasing uptrend through the last few years. The final step in the Selfwealth Appendix 4C journey is just to have a look at the chart to see what's happening. So this is the 1 year daily chart, goes back to April 2020. So it's just after the low point in the COVID-19 financial panic, when the share price of Selfwealth got down to as low as 10 cents. That would have been an ideal time to buy, but that's all in hindsight. So we don't have a time machine. We can't go back in time. But from that low of 10 cents, the shares rallied quite quickly until we got to early September, where the share price got to a high of 80 cents. And we've seen that price of 80 cents being reached twice, and that is a resistance level. Now, the share price has got low as 50 cents twice, and that is support. And right now, the share price has been dropping ever since they released the half-yearly report in February. A very interesting day that was, because I, just like the market initially, did like the half-yearly report, and then we saw selling throughout the day, and that was a catalyst for the share price decreasing, because we did see the share price get to 80 cents on that day, which is resistance, and the share price is approaching 50 cents. If we did see the share price of Selfwealth get to 50 cents, that would be a very interesting price point for me personally, and I might even put in a bid at that point in time. So there's always a price and time to buy into a company. And Selfwealth, with the share price decreasing since the half yearly, you can be patient. It's just waiting for the price to turn into an uptrend. But if it does get to 50 cents, that would be a very attractive position to take a position, because if it does fall below 50 cents, that would be quite bearish and an automatic sell. Now, on the flip side, if we do see some strength in the share price moving above 80 cents on good volume, that would be quite bullish. And if we do get to that point, more than likely the share price would be in a medium-term uptrend. So right now, I am keeping a close eye on Selfwealth share price just to see if it does get down to 50 cents, where I might take a position. Although Selfwealth does have attractive financials, really good growth rates, everything ticking when it comes to that side of the equation. The chart does look quite weak ever since the half-year report in February, and I'll be just waiting to see what happens with the share price. Being patient in these sort of circumstances is good, and some people would buy just because the share price has dropped to a certain level, and that's good strategy for them. What works for me is to wait for a signal to buy, and I haven't got that signal yet. 50 cents would be a signal. Return to an uptrend, just a short-term uptrend, would be a signal for me as well. And just the fact that they have really attractive financials, they are operational cash flow positive, all those ticks when it comes to the finances is one of the reasons I am looking very keenly at buying into Selfwealth. Now, they are expanding, so they did open up US trading on their platform in December, if I remember correctly, and that is the same sort of fees that you would pay for trading on Australia. And also, I think their exchange rates is 0.6%. So more than likely, they will expand their international trading throughout the world. I'm just assuming here, but that would be a logical expansion plan for Selfwealth. Future. So this is one little concern. One thing I am wary about is zero-fee brokerage moving into Australia. It is quite common in the United States, and when something becomes common overseas, particularly in America, eventually that will come here. And we have seen Robinhood is free, and a massive uptake of Robinhood in the United States. We do have zero-fee brokerage here in Australia right now, but it's typically overseas markets, and there is an exchange rate, say 0.7%, for example, stake. And we're also seeing brokerage fees in Australia become lower and lower. So when I signed up to CommSec, it was $20 for most trades. They actually lowered that to $10 for trades of $1,000. And then we saw Selfwealth, $10 or $9.50. We've seen Superhero come onto the scene, $5. So eventually we'll see zero-fee brokerage. When it comes into being and becomes quite popular in Australia, I think we've got quite a few years before that happens. And in the meantime, because Selfwealth has sort of a low market share of that of the sector, CommSec still has a massive market share, along with the major banks like Westpac, NAB, ANZ. They all have very large market share when it comes to online brokering services. I do think Selfwealth has the potential to grow their market share quite considerably before we go into zero-fee brokerage. And in fact, Selfwealth could be the ones who bring zero-fee brokerage to Australia. Up until then, keeping a close eye on this company, very interesting company, and as the share price decreases, I'm becoming more and more interested into buying into this company. So that's all I've got on this quick take Appendix 4C video of Selfwealth. If you have any questions, leave it in the comment section. Any thoughts, any mistakes I've made, you can leave a comment. I do like and encourage constructive criticisms. The one thing I don't encourage is destructive criticisms because that adds no value to any conversation. So that's all for this video. Again, I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial circumstances. That's all. Have a good day. Bye.